Very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko. We all exchange information. We write letters, we post letters, we exchange emails. Information is exchanged between father and mother, between husband and wife, between father and children, amongst friends. But today we are going to look at information, exchange of information on a larger scale. We're talking about, or we're going to be talking about, exchange of information in taxation, whereby tax authorities exchange information on the tax affairs of taxpayers. If you recall, on our episode 11 of 2014, which came to you in the middle of March 2014, we brought you the story of a 3-day training workshop put together by the Federal Inland Revenue Service and the Joint Tax Board for persons who thereafter, that is after the training, became desk officers for exchange of information in their various states, that is at the levels of the Boards of Internal Revenue in the states. We did promise at the end of that episode that we will subsequently bring you interviews from resource persons who would help us in educating and enlightening you about the rudiments of exchange of information. That promise we are keeping today, but not before these clips from the 3-day training workshop.
In my state, I think we have received a letter from JTB informing us of one of our taxpayers that has additional sources from abroad. And when we called this person, she even gave us further information that she was not the only person. Because, yes, that she was not the only person. That most of them, when they were the all of them bought property in Dubai. Why she is only one that her name was sent to the States. And I made a point of correction to her. Possibly other people did not use Kwara address. And your place of residence is very relevant for taxation. Perhaps that's the reason why your name is sent to us. But nevertheless, you still have to pay off what is due.
Nigerians are very mobile. The person you see in your state and has, a 2-page file in your state revenue is having international income. I mean, there was a typical case of a Nigerian that showed up in Schiphol Airport in Amsterdam. And in Schiphol Airport, you have a lot of young immigration officers. They just query you. I mean, that's what they do. And so this Nigerian was asked, how much are you carrying? And they presented evidence that they had 60,000 euro. And for the white man, it's like, they have this kind of money. So they sent us the information with his passport details. I said, can you find? And the man said, he's a Nigerian, he pays tax in Nigeria.
Now to the interviews. For this our humble effort at ensuring that you are brought up to speed as to what exchange of information means to you and me, we have 5 gentlemen as our guides. Please note that these interviews were conducted at different locations on different days. We began by asking the gentlemen, what exactly is exchange of information?
Taxation cannot be done in an isolation. It cannot be done in a vacuum. You need information to be able to make the right assessment. Even when an individual voluntarily comes to declare his income, and in a case where it is an individual that is in employment, which means he has some costs for earning his income, he still needs to have an alternative, source or means of cross-checking or validating the information that he has declared for purpose of making the proper assessment. If you look at our tax laws, they replete with provisions dealing with the powers of a tax officer to call for more information. The powers of a tax officer to summon a taxpayer to come to answer questions. Because provides for the tax officer to even requisition information from any third party. As long as he has every reason to believe that that third party has information about the taxpayer or a potential taxpayer that the tax officer, is about to make an assessment on. Now, when you now talk about, countries, even within us in Nigeria, between one state and the other, whether Lagos State and Ogun State, given the issue of mobility of individuals, urban conurbation, people live in Ogun State but work in Lagos State, and vice versa. And therefore, what the law says, taxation is on basis of residence. Then how will the Ogun State Internal Revenue Service tax people who are supposedly living in Ogun State but are working in Lagos? Unless there's information exchange between Lagos State and Ogun State. Then now talk about internationally, that given high mobility of labor across the globe, given that companies again operate across boundaries, territorial boundaries of their countries of origin, then they require exchange of information for able to make the right assessment.
There's a fraternity of tax officials. We're working together, and exchange of information is right at the top burner of the tax discussion now.
Exchange of information has to be done in a confidential, accurate, and timely manner. It must be tailored to request. And then is for tax purposes. The idea of exchange of information became the order of the day way back around 2000, when the G8 and the OECD countries formed the Global Forum on an ad hoc basis to pursue the cause of transparency and exchange of information. It was realized that although globalization which promised growth of global wealth, at the same time had inherent risk of tax avoidance and tax evasion. In 2011, I happened to be one of the lucky officers that was invited to South Africa for a seminar on exchange of information.
What do we strive to achieve with exchange of information?
The biggest problem that revenue authorities experience is taxpayers' ability to move their financial matters around the world. Taxpayers with sufficient resources can reallocate their financial resources, and it allows them to either plan the tax affairs according to tax legislation, which is tax avoidance, as opposed to taxpayers that is set out to evade tax, referring to it as tax evasion. And revenue authorities are now using these instruments to get access to information that sits in an overseas territory to better understand a taxpayer's compliance. So the purpose of the EOI is to increase a revenue authority's ability to obtain information and also to close the tax web around non-compliant taxpayers.
Okay. All we want to do is ensure that everybody pays what is fair to the tax authority, whether our own tax authority in Nigeria or to our treaty partner. The DTA, makes it obligatory for us to help our treaty partner countries also ensure that their tax residents who have come to Nigeria to do any business should pay what is their fair share back home. Vice versa, they will help us ensure that our tax residents, Nigerians who are very mobile everywhere, also pay what is the due share of tax to Nigeria.
As a follow-up to the training workshop that was held in South Africa in the year 2011, at which Nigeria had 4 trainees in attendance, the Federal Inland Revenue Service and the Joint Tax Board organized the Abuja workshop in February 2014. There were 2 officers each from each of the 36 states. The aim is to make them desk officers for EOI in their respective states and the veritable link to the competent authority for EOI in Nigeria, that is the Federal Inland Revenue Service.
We have a peculiar situation in Nigeria where we have 37 tax authorities, the Federal Inland Revenue Service and the 36 Board of Internal Revenue. So it is enough for us to even create a platform where within, among ourselves, we should design, we should have an arrangement in place where we'll be exchanging information on tax matters. In exchanging such information, there are other restrictions to as to who to even take, to benefit from those information. It should be just the tax authority that you give those information to. It should just be for tax purpose and for only for tax purposes alone. Okay. And then where we have involved the states, the states on their own cannot have direct communication with other countries.
Okay.
So it has to be through the Federal Inland Revenue Service that is acting on behalf of Federal Government of Nigeria in all issues concerning agreement on avoidance of double taxation. Okay. So they have to, all information have to pass through the FRS. So this workshop has brought state participants so that they understand all the requirements as far as exchange of information is concerned, and what will be required of them, and what also they should know. For example, if they have issues with expatriates or foreigners that are in their domain, how to handle such issue instead of thinking of writing direct to countries of origin of such persons. They have to write through the Federal Inland Revenue Service.
Now, Mr. Moyele, we know for a fact that you were one of the lucky few that attended the first course on this exchange of information framework way back in 2011 in South Africa. What didn't they tell you in 2011 that they are telling them now?
Yeah. At the training in 2011, we were taught what is exchange of information. We were taught on the various forms of exchange of information. Number one is the exchange of information on request. That is when a jurisdiction, the competent authority of a treaty partner requests for a specific information from the other jurisdiction, and then a tailored to request information is now given is now supplied by the requested state. The second approach is the spontaneous exchange of information. Spontaneous exchange of information demands that a treaty partner supplies information that is foreseeably relevant, but has not hitherto been requested for. You know, in the first one, there is request.
Request, yeah.
But this one is not that the treaty partner to whom the information is being passed has requested for it, but is being forwarded for reason of that information being foreseeably relevant to that other treaty partner. And there are three requirements for this, for one to know that an information is foreseeably relevant to the other party. There must be a taxable person. There must be a tax type. And then that information must be specific. Then the third one is the automatic exchange of information. automatic exchange of information is a systematic and periodic transmission of bulk information from one treaty partner to the other treaty partner. For instance, in respect of if country A, for instance, has information about dividend, interest, royalty accruing to resident of the other treaty partner, you could furnish automatically that information to the other treaty partner, because that other treaty partner, because the earner of that income is liable to tax in his state of residence in respect of his global income. So that his state of residence will find that income useful. For instance, if A Limited, a resident of Ghana, has some investments in Nigeria, and then dividends are paid. He has some properties in respect of which rental income is earned. Nigeria, if there's an agreement, a TIA agreement between the two countries, can furnish the Ghanaian, the competent authority of Ghana, such information, which when Ghana is now calling for tax returns in respect of the global income of that investor, he can capture that income. Between 2011 and now, there has been, because like I said before, I said the course which the Global Forum and ETAF have been pursuing has been how to curb tax evasion and tax avoidance through transparency and exchange of information. Now, between that time, between 2011 and now, there's been a lot of development, especially on transfer pricing. Prior to 2011, as at 2011, we were not having our own transfer pricing regulation. But Nigeria was able to put in place a transfer pricing regulation in 2012. In 2013, a transfer pricing unit that is to implement that regulation and then begin to test run audit of multinational companies that are involved in this transfer pricing scheming. That that transfer pricing audit unit was created in 2012, which is part of what the people who are doing this 2014 workshop on exchange of information are being briefed. Yeah. So what we have now is an improvement on what we have in 2011. Yeah, in 2011, we were not having a dedicated unit on exchange of information. We now have a dedicated unit on exchange of information. Now, we now have a draft exchange of information manual.
Since 2012, when a unit was set up, we are building up the processes, we're doing all the advocacy, the enlightenment. Those are the early days we are. We're getting ourselves involved with other organizations, building relationship like CAC. Because if you need ownership information of corporates in Nigeria, where do you go? CAC. So we're building a relationship with them. If you need information about movement of people, who do you go to? Immigration. So apart from internal stakeholders and FRS, other agencies will need to build relations with them, because what happens, the kind of information they have, we need them to determine what is fair. All we're saying is that everybody pay your fair share.
Central to all the discussion on exchange of information and its cousins is the Organization for Economic Cooperation and Development, OECD. What is OECD all about?
The OECD stands for the Organization for Economic Cooperation and Development. And it is a body of governments that comes together. It consists of 34 member countries, and it is mainly developed countries that serve on the OECD. And they are a body of persons or entities or governments that set out policy frameworks. They look at different aspects around the world economy. They're looking at aspects around health. They're looking at aspects around labor. And they also look at aspects around tax compliance, which include a double tax agreement. The OECD have developed the Model Tax Agreement or the Model Tax Convention, and that was the first in its kind, and it was followed by the UN a number of years later. So the OECD is really the standard setter for tax policies and tax procedures.
On the first day of the 3-day workshop, you told a story of somebody in South Africa, correct me if I'm wrong, who was claiming that everything was a gift from his mother in the UK, without mentioning names. You want to share that story with us again, with our viewers?
We've had a case where we've picked up a taxpayer who has been, according to us, under-declaring his income. And it was picked up based on the lifestyle that he pursued. And through the exchange of information process, we started to realize that the information that he provided to SARS was that his mother is very generous and she loves her son very much, and she was able then to provide him with sufficient funds in order to maintain his lavish lifestyle. But it was subsequently determined through the exchange of information process that his mother is a widower, and she lived off a pension of her deceased husband, and she was never going to be able to maintain such a lavish lifestyle of the taxpayer. And although it was a prolonged process, we continued with the exchange of information process, and subsequently the taxpayer settled with the Revenue Service on the amount owed.
It's settled. You didn't go to court? You didn't get jailed?
It was a prolonged battle.
Every day, my people they for work. Some they do office work. Some get it them own business. So all of them want good road, constant power for better life. Whether now office work, oh yeah, pay your tax. Whether now your own business, oh pay your tax. If you want a better life, oh pay your tax. Now your civic responsibility, pay your tax. Better soup, now money cook am. Oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right. Good roads, good hospitals, portable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
Do you want to hear the conclusion of that story or the resolution of the matter if you like? If you do, then you have to join us next week, because it is time for us to go. Time flies. Mr. Tablanche will still be here. In addition to concluding the story, we'll also be looking at the essential ingredients of the exchange of information framework. We'll be examining the OECD and the UN models of EOI, and is there any link between EOI and transfer pricing or double tax agreements? Join us. In the meantime, what is the summary? The summary is that in as much as globalization has made it easier to conduct business across borders, that same globalization has also ensured that transactions carried out across borders are no longer hidden under the carpet. It has ensured that you cannot hide your income and you cannot dodge paying taxes. The word they say is enough for the wise. We have put you on notice. Keep your nose dry. Join us next week for part 2 of this expose. I want to thank you most sincerely for watching, and we wish you a blessed week ahead.